No, thanks for coming to the panel. I think we're going to have a really good conversation for you. We have three real experts here. I am going to help facilitate the conversation, but we're looking forward to hearing what these guys have to say. In order of presentation, we've got Chris Ote, who is the Chief Revenue Officer at CU Wallet. We've got Cliff Duffy, who is the President of Cybera. And we have Nitish Patel, who is Director Wireless Media Strategies and Mobile Payment Service at Strategy Analytics. And with that, I will turn it over to Chris.
Thanks, Joe. I appreciate that. As Joe mentioned, I'm Chris Ote with CU Wallet. I represent the credit unions in the mobile space. One of the things we've been one of the reasons I like to come here is because I already know what the financial institutions are thinking. I'm fascinated talking to all of you in the room. So I appreciate all of you have taken the time to chat with me. Thank you very much. The financial institutions are under enormous pressure, obviously, from the credit unions specifically, from the larger financial institutions, but financial institutions in general, right? Every new wallet that pops up, every third-party wallet that pops up is a threat. And the financial institutions are going to try to leverage their existing relationship with their existing customers in their existing app and bring it to the marketplace as a wallet. So I'll be happy to talk more about that as we get into the conversation. Just a little background on me. I am a credit union board member. I'm the chairman of the board at South Bay Credit Union, and I spent 18 years at Fiserv before starting CU Wallet about 3 years ago. You guys see me doing the math in my head right there? So thank you for having me today. And Cliff?
Yeah, thank you. Thank you, Chris. I am Cliff Duffy. I'm the president of Cybera. The quick on Cybera is that we're a network security and wide area network services company that does primarily focus on retail. And in particular related to mobile payments, we've been providing secure cloud payment gateway and network security services, assisting with PCI compliance to some large chain stores for a long time. But over the past few years, as we've seen mobile payments come into the large brick and mortar chains, we've seen a lot of new complexity enter their store environment. And new security risks, new security challenges that we've had to help our customers with integrating. So I think it's a great fit, and we're honored to be part of this panel. Nitesh?
Hi there, I'm Nitesh Patel, and I head up the mobile payment service at Strategy Analytics. For those of you who are unfamiliar with Strategy Analytics, we are a market research and consulting firm. We deliver our research through three primary channels. First is supply side research. Secondarily, we provide consumer insights and user experience innovation, so delivering the voice of the consumer. And then thirdly, we offer telemetry, a telemetry platform. So we have a kind of a window into the soul of how people are using their mobile phones. To match up with a lot of the work that we're doing on the consumer side. In terms of the mobile payments work that we've done, we've helped telcos, we've helped device OEMs and other players in the payment space to define and develop their strategies around mobile payments. I wanted to use this panel really to make three points really, and primarily from the voice of the consumer really. The first is that actually our research does show and confirms that security remains sort of the biggest barrier to the adoption of mobile payments in the research that we're doing. Over 50% of consumers said that security was the main barrier for them in terms of adoption, and that pretty much was the same across all the demographics. So across age groups, across gender, it was the number one. We did interestingly see a spike in. We did see a higher number of people in the 24 to 36-year-old age group the people that you would expect to embrace mobile payments, saying that that security was an issue, and one of the major things about their concerns really comes down to, what if I lose my phone? And if they lose their phone, they're worried about the impact of losing their payment credentials. And of course, pretty much most of us in the room know that, because of technologies like tokenization, and because of the biometric authentication, that those issues shouldn't be, those issues should in effect be in the background. But clearly that needs to be communicated to the consumer. And sort of secondly on that, I think, brands like Apple have done, based on where I am in the UK, where EMV is more prevalent. It was very noticeable to me that when Apple launched in the US, that the main message for Apple Pay was that it was more secure. They made a point of trying to communicate to the media that it was, tokenization and biometrics were at the core of the offering to help them do that. And then sort of finally, I would say it's important to understand that although I think everybody in the value chain must be responsible for communicating the safety features of mobile and why it's more secure. I mean, we had I can't remember the guy, the speaker's name, but he was saying that mobile payments are more secure than a card. So I mean, the payment networks and the banks that sit on all this data in terms of the relative fraud rates across each of these platforms, they could quite easily communicate the fact that mobile payment is more secure than traditional card schemes. But consumers are actually really interested in, and more interested in, hearing the message from players that they feel have expertise in financial affairs. So they're banks and digital wallet providers, established ones like PayPal. So our research shows that they are consumers are generally more receptive to mobile payment solutions from those players. They perceive them to be more secure.
Great, thanks guys. So let me also introduce myself. My name is Joe Rodriguez. I'm a partner at Davis Wright Tremaine in Washington, D.C. We're a law firm and I'm a financial services lawyer, focus on payments, and we do a lot of work with traditional financial institutions as well as the disruptors in the industry, and more do a lot of work with retailers who are beginning to look like financial institutions in terms of payments in the mobile payments industry. So I'm going to ask the panel some questions that I think will be interesting for you guys, and you have I guess a sense of what my bias might be in terms of some of these questions. But first question I have is, what technologies do you see winning in this space, and does it matter?
Well, I think I'll take that one. I think everybody in the room knows that there's three basic technologies that are out there right now, right? There's NFC and host card emulation, there's Bluetooth low energy, and there's QR codes, right? So from I guess what we're seeing from the financial institution point of view is that we really don't give a rip which technology wins, right? You have to be technology agnostic and you have to be device agnostic. I think what we're seeing in the marketplace is the pays are leveraging NFC and host card emulation, but every retailer in the world you see that deploys their own payment piece of their app, whether it be Starbucks or Walmart Pay or Dunkin' Donuts or whoever, is leveraging the QR codes. So to pick one, and I'll tell you what, Bluetooth low energy is the best of all of them, right? I've seen it work. Bluetooth low energy is the cheapest and the best of all of them, but it's not getting the traction. And there may be a new technology, right? We've all seen the demos with the rings, right? You can swipe with your ring and it's got an NFC chip in it, right? So there's going to be a new technology. The point is you have to be technology and device agnostic in the space.
Cool.
Period.
So there you go. So what are the advantages and disadvantages of traditional financial institutions?
Well, I think Nitesh had some good
Yeah,
stats on that.
sorry, I was going to.
Go ahead.
I should have jumped in and said. So we've actually conducted research with consumers and taken them through various scenarios, whether that's going into stores and using the different technologies that was mentioned there, Bluetooth, NFC, and QR codes for different things like everything from tapping smart posters to actually making financial transactions at the point of sale. And our research overwhelmingly showed that actually NFC was the most preferred technology. So I completely agree. I think, if you're accepting payments, you want to be able to accept the sort of the broadest volume of those, regardless of the technology, and that's in an ideal world. But I think consumers are definitely telling us that there is a preference for NFC, and they find it less cumbersome than QR codes, certainly. Whereas Bluetooth, I think, is still a little bit too early. I think there were some concerns there about. Actually, I didn't have to hand anything over. It was more of a cultural shock to them. So that whole scenario from PayPal here, and I think Google are doing it now as well, where you just walk up to the, you verify yourself by being in front of a camera and facial recognition. That is definitely way more slick than NFC, but I think there may be some cultural hurdles there, not just from consumers, but also in the sort of chain from retailers as well.
And I think, not to gloss over it, but one of the advantages of the financial institutions is the KYC, the know your customer information that the financial institutions already have. They already know who their consumer is. Their consumer's already using their app, their mobile banking app, and their consumer's already authenticated within the app. So if the payment piece can be bundled into the existing mobile banking app, we've removed security from the equation, right? We've already authenticated the consumer, and the consumer's ready to go. The disadvantage of being a financial institution and deploying a wallet is getting it accepted at the merchants, right? That's obviously the biggest thing. And I think in order to solve the problem, there's going to have to be a partnership between the merchants and the financial institutions.
So let me piggyback off of that. So, mobile payments are, for the criminal element out there, a real treasure trove of data, of information that they could sell. How effective are the kind of common security measures that you see today, such as fingerprints to authorize a purchase, advanced tokenization, NFC-based contactless pay? And how effective are those current technologies?
I'll open up on this, I'll say that the world is evolving quickly on identity validation, which is very important. But now the number of touch points, the systems that have had to be opened up to enable mobile pay has created a lot of complexity for our retail customers, and effectively created a lot of new potential attack vectors and threat risks. To give a great example, and these are things that a lot of customers, a lot of the retail chains don't necessarily see coming. It's public knowledge. We deployed network security solution for ExxonMobil several years back, and they've since relaunched a new mobile pay platform. The initial transaction is initiated with a QR code, but the amount of communication that has to happen between the mobile device talking to public web servers, those public web servers talking to secure devices behind their firewalls, actually enabling a fuel dispenser gas pump, to authorize $75 of fuel. That's actually a really complex transaction, much more complex than what may have been a traditional payment transaction initiated by a card swipe or chip dip. And so that's just one example. But every customer that we work with that's now facing a mobile payment integration, I mean, they're having to sort out the identity verification, the fingerprinting, biometrics. But as well, they're now having to figure out how do they open up their systems into to fit with this new ecosystem of mobile payment solutions.
So sorry, $75. Do you drive an Escalade?
Actually, my wife does. But that was not planned.
Maybe a Hummer, I don't know. So what role does the cloud play? What role does the cloud play in keeping mobile payments secure?
Sure, I'll start that, and then I think there'll be some other things that Chris and Nitesh want to add. We actually launched our cloud solutions for the purpose of integrating with mobile pay platforms that have cloud-based systems. And and there's other providers like us. There's a lot of new evolving providers that are able to integrate cloud applications with the in-store systems, so you really can have a seamless experience for mobile pay transactions between the cloud and the brick and mortar stores. I think as those cloud platforms are maturing, it's going to prove to be a much easier method of bringing mobile payments into the broader market of retail chains. It's a big enabler for sure.
So I think I'll just add on, the topic of this presentation is supposed to be how security of mobile payments can be communicated to encourage adoption. Here's the best way to do it. Joe, here's my phone and here's my credit card. Which one can you do more damage with? Yeah, that's end of story right there. Right. I mean, the phone is exponentially more secure. I mean, if we were to design a payment system today, this has got to be one of the worst things in the world, right? You got a number in the clear, you got a signature. Mine's not even signed. Right? I mean, there's better ways to do it, and that's the best, most effective way to communicate.
And I would add, just from a security standpoint, from a consumer standpoint, I mean, really they don't care. They just want to know that it is secure. And sort of going back to what I said in the opening, really one of the best ways to communicate that is going to be by providers of those services that are benefiting from lower fraud rates actually communicating that, hey, mobile payments is cheaper, it is more secure than your traditional physical payment cards. So go ahead and use mobile payments. And we've actually done some testing on Walmart Pay. We've done some evaluation on how the process works from setup all the way through to completion. And what we found is that the Walmart Pay application does a very good job as you're setting up in terms of highlighting and communicating why Walmart Pay might be more secure than, or why it is secure, and the different reasons that it is secure as you go through it.
Yeah, we've started putting in the wallets that we're deploying at our financial institutions little tutorials that talk about exactly. I won't say we borrowed it from Walmart, but we saw it and then we built one. So it's a tutorial. It says, hey, this is more secure because of this. This is what tokenization means. This is the data that's being stored, and this is where it's being stored. Just a little tutorial to let the credit union member or the bank customer know what's happening behind the scenes as they provision their wallet. And it's being provisioned from within inside mobile banking already.
Interesting. Yeah, that's really interesting to kind of bring it to the consumer level so they understand what's going on.
Sure, and your next question talked about how elegant the solution can be, and if it's already embedded in the mobile banking application, that means that we can display the balance for the consumer when they're purchasing something, right? How much money do I have in my debit card, in my checking account? I'm at Walgreens buying something, how much money do I have in this? How much available credit do I have on my line of credit for my credit card? Having that information at the point of sale is going to give the consumers more confidence. And consumers that know what they're going to spend, know what they have available at the point of sale, spend more at the point of sale than consumers that don't. So I think it'll be advantageous for both the retailers and the financial institutions.
Yeah, interesting. So in the kind of unfortunate circumstance of a data breach, what are some of the kind of best practices that can be implemented to minimize consumer impact and at the same time try to drive, overall, in the context of this, unfortunate circumstance, still drive confidence in the overall mobile payment security ecosystem?
Sure, I'll start on that, and I feel like we've made a lot of progress in the industry, with coming up with a better secure touch point to the end users, which is great. where we really see the next evolution, really evolving right now is it is on the system side. And in the event of a breach, there just is there's a different level of data that's now required. If you want to do a forensic investigation now with systems that are enabled for mobile payment, we now provide information. We've got an in-store appliance that literally tracks every single radio device, near field or Wi-Fi that came within the store. We log it. We log what it connected to, and when. And that's a big data problem that didn't exist 5 years ago related to payments. And so just the logging and tracking of data is critical in a breach. But we're seeing really across our customer base much better awareness of the potential threats that could come as the mobile payment applications are forcing networks to open more. I actually feel good about how quickly most retailers are evolving to fill those holes. But I think that's really where the industry is making some focus now, since there's been a lot of progress on the identity validation side.
Great.
I was just gonna add that I think given the kind of the trajectory that we're seeing on mobile payments in terms of user adoption, basically on a relatively, I would say, slow gradient. Yes, Apple Pay came in, boosted awareness, and the Apple brand has kind of helped sort of validate mobile payments to consumers to some extent. But if a breach was to occur and it was to be well publicized on mobile payments, I think there would be I would certainly have some serious concerns in terms of how the mobile payment sector would be able to cope with that in terms of pushing on to the next level, because I think it could potentially kill consumer trust and belief in mobile payments. So it really can't afford to happen. And I know we've had some issues with Apple Pay where the banks haven't actually verified card details when they've been inserted into Apple Pay. So, there is some leeway, but I don't think consumers are going to be particularly happy with signing up to something that they feel that could be a risk to them.
Chris, do you want anything?
My stance on fraud is that I'm against it.
Well, I'll double dip on what Chris I think showed the great example earlier. The method of if you're going to choose a card or choose a mobile device. The mobile device is, and that transaction, the initiation of that is inherently much, much more secure. And, it's a better way to start that transaction. That's only a piece of the environment. There's, the rest of the systems and infrastructure, that complement that. And it's as more technologies come out, I think it's just going to give us a lot of new opportunities and challenges to face.
Sure, but I just feel that it hasn't been communicated effectively by the providers of those services.
Oh, sure.
It's focused on the wow factor. It's convenient. You can move through quickly, but that it is actually more secure. I think American Express have tried to push that through in some of the TV spots that they've been running, but other than that, it seems to be more of an issue of the background.
It's not actually more secure. I've lost 5 of these cards this year by taking it out, so I'm gonna put my wallet back in my pocket.
No, but that's a good point. I mean, I think you've got the millennial generation that is just adopting it, not really thinking about that. But then you've got a little bit of an older population that is very much concerned about that, and that message is an important one to get out there.
And I think a good point to make is that everybody now, and for the last couple of years that I've been in the mobile payments business, is vastly overestimating what's going to happen in the short term, and then in turn underestimating what's going to happen in the long term. And I think it's important to keep that in mind as we move forward here.
Yeah, excellent.